Hello guys, welcome back to FX Bit of Any Forex Argo Decoded. My name is JD. Today I'm gonna teach you guys something you need to know as a trader. If you want to become professional trader, if you want to become profitable trader, make sure you follow this video because I know for sure it's going to change you guys. It's gonna change the way you trade the market. So today we're gonna redefine forex. I'm gonna show you exactly the anatomy of a range. This is what we're gonna cover today: anatomy of a range, where we go deep into understanding of major liquidity and external liquidity, and we also talk about internal structure, range structure, deep and shallow pullbacks. I know when you are trading you may have a problem understanding what is happening in the chart, why this movement is taking place. So if you are a trader, you have to understand all of those movements, why price is moving in that way, why price is leaving this zone, or why price is going that area, what is the target of institutions. So you have to make sure that you understand all of those concepts before you think of trading. So this video is for you guys. Make sure you watch it till the end. Also, don't forget to subscribe to this YouTube channel so that we not miss upcoming videos that we are going to upload, right? So without wasting our time, guys, let's get started. Okay guys, welcome back to anatomy of a range. So before we talk about this concept, make sure you understand what is a range, and this is what we're gonna define now. What is a range? So you know guys, when you start running forex, you were taught that market will be creating a series of lower low, lower highs, lower low, lower highs, lower low when you are in downtrend. And you were also taught that market will be creating a series of higher high, higher low, higher high, higher low, higher high, higher low, in the case we are in uptrend structure, right? So these are the concept we already know as traders. But what do we call a range? So basically in the forex market, what we call a range is when market creates a low, market creates a high, in the case we are in downtrend, and the market creates a new lower low here. So once you have got this information in front of your chart, immediately you have got your range. So what is your range? So before you define a range, you must know whether your range is a bearish range or a bullish range. So a bearish range is formed when the market is creating a downtrend, or when market is willing to start creating a downtrend. That is what we call a bearish range. And a bullish range is when the market is creating an uptrend, or is showing intention of creating an uptrend. So that is what we call a bullish range. So this time with this example, what we have now is a bearish range, because market is showing willingness to create a downtrend. How do we know that? So we know that when market is creating a point A and a point B, we don't have any direction. And when it is creating a point C, for example, we don't even have any direction. We don't know whether it is going higher or down. But as long as market decides to go down, as long as market decides to go down, this time, as long as market decides to go down and it breaks this structure low, and it breaks this low, this time we know the intention of the market is to create a downtrend. The intention of the market is to create what? A downtrend. So this time, once you have got market trading below this area, breaking this area, right? When you have got market breaking this area, that's when we say you have got a break of structure. A break of structure. We say you have got a break of structure. We call it BOS. BOS, or break of structure. Break of structure. We call it BOS. Break of structure. Try to understand that. A break of structure. So whenever you see me talking about BOS throughout this video, try to understand that I mean break of structure. So BOS means break of structure. So a BOS is when a structure low is broken or a structure high is broken. This time we are in downtrend, market has broken a structure low. A structure low is broken here. So we call it a POIs, a break of structure. This is a break of structure, as you can see. So make sure you add this in your chart if you want to start reading price in a proper way. Make sure you mark your chart. Make sure you mark your chart. So now that market has broken the structure low, so from the high all the way to the low, from the high all the way to the low, this is what we call a range. This is what we call a range. And this time we say we have got what? We have got a bearish range. We have got a bearish range. The reason we call it a bearish range, it's because a range is formed in a downtrend. We expect the market to continue to create a downtrend. So you see me putting here a horizontal ray or horizontal line. So this is your boundaries. This is your playground from the high, from the lower high all the way to the lower low. This is your range. This is your range. This is your playground. So as market is moving, institutions will do what? Institutions, they know exactly, as market was pushing down here, there were people who are selling here. People are selling. The reason institutions create a pullback is to take out those people, what we call grabbing liquidity or liquidity inducement. They are inducing some liquidity, right? This is why institutions create a pullback. They need to correct some money here before they create a new lower low. So this time, understand what we call a range. Before we talk about the anatomy of a range, first of all, we have to understand a range. Your range is this. From the high, lower high, all the way to the lower low. This is your range. This is your range. Now, our expectation is always this. Our expectation is always to have a pullback. And once you have this pullback, market will eventually push down to create a new lower low. This time, once we have this information, we say we have got a new lower high and a new lower low. Why do we say we have a new lower low here? Because the previous lower low was broken. So as long as this previous lower low is broken, we will call this a POIs, a break of structure. A break of structure. A POIs, a break of structure. Have you seen a break of structure? Then our new range will start from the lower high, from this current lower high all the way to this current lower low here. Have you seen? This is what we call a bearish range. This is our new range. We are no longer interested in this range because this range was traded through. We have got a deep pullback or kind of pullback in this range before. Then after market trading into that zone, we have a price pushing down again to create a new lower low. Now from this lower low, from this lower high all the way to this lower low, this is what we call a new range. We have got a new range. We have got a new range. So we say we have a bearish range. So as long as market is creating a pullback, whatever market is doing here, I repeat one more time, this is something which will confuse some of you guys. Whenever market is creating a pullback, I repeat one more time, whenever market is creating a pullback, whatever happening here within this range is still a pullback. Whether it is a downtrend forming inside here, whether it is uptrend forming inside here, we are still in what? We are still in a bearish market. This is still a pullback. Whether market goes here and they start creating a downtrend, we don't care. We are still in a pullback because we are still trading in our range. Market has the right to come back to this area before selling all the way down. But what we sure know, market will never take this high. Market will not take this high as long as market is going to stay bearish. As long as market is going to stay bearish, it will never take this high. I hope you understand. This high will not be taken as long as we are still bearish. So we keep believing that market will eventually go down. But if market dares to take out this high, then we are no longer bearish. This time we are bullish, even 1 pip, because if it is not a breakout structure, it is an inducement. We'll talk about inducement later, maybe in the future. But this time, understand that if this is at the beginning of the range, we don't expect the market to trade even 1 pipette above it. It should stop on this area and start trading all the way down. So you have to understand that before we continue. Now this is a good example of what we call a bearish range. A bearish range, we expect the market to create a pullback and then go down to create a new lower low, lower high, lower low, another break of structure here, another break of structure here. Then the range is violated. Then we say this is a break of structure. After getting this break of structure, our new range immediately will start from the lower high all the way to the lower low, right here, all the way to the lower low on this level, So we expect again a pullback in this zone, and we keep repeating the same until market proves us otherwise. Now this is what we call a bearish range, or a bearish market, where we have a bearish ranges. Market is creating bearish ranges. I'm trying to show you what is a range before we talk about the anatomy of a range. Now here, for a bullish market, of course, if market creates point A and it goes out to create point B and it creates point C, we don't have any direction. When the market is here, we don't have any direction, right? But as market pushes higher and breaks the high, now we have got an idea of what of where price is likely to go. This time we will call this level a break of structure. A break of structure, POIs, a break of structure. Now we have a structure moving this way, high, lower low. So we have a low, we have a high, we have a higher low, then we have higher high. After market creating this higher high, we know now our range starts from the higher low all the way to the higher high. So this is your playground. This is your playground. As market is gonna create a pullback, as market, whether it creates a pullback here and it goes higher, or creates a pullback in this zone, whatever happening, we know whatever happening within this range is a pullback. Market may do this and immediately drop again, trades on this area, and then it goes here to create a higher high. It can do anything. But what we surely know, market should not break this low. Right? So this is everything you have is a pullback, then until market goes higher to break the high. So we will say we have got higher high, higher low, higher high, and then above here we have got a break of structure. We call this level a new break of structure. POIs high, a new break of structure. This is our break of structure. Now our new range will start from this low. Our new range will start from this low all the way to this high. So this is our bullish range. range. Then our expectation is to see a pullback forming in this area, whether it is stopping here and it goes higher or goes deep. What we know is that this is a pullback within our range. We expect a new high to be formed. So you may ask yourself, how do you know market is gonna stop here? How do you know market is gonna stop here? How do you know market is gonna stop here? Maybe we'll not cover that in this video, but what I promise you, everything you need, you have everything you need to understand how to read price. So as we go on, maybe we'll talk about that. I'll not share everything here, but I'll make sure you guys understand all of these concepts I'm trying to share to you. So we expect that market will create a new higher high on this level. So we keep believing in that way, knowing that this will be a new higher low. Market is going hard to create a new higher high. Then our range will start from here all the way here, and we keep repeating the process until market give us another signal that it is willing to go down. And what will be that signal? It's when it will break the low, right? That's when we start believing now we have got a bearish range. So this is what I want to tell you about a range. Now you can go back to this concept. We are going to talk about major liquidity, external liquidity, internal structure, range structure, deep and shallow pullbacks. Now starting from here, from this bearish move, just from this lower low, lower high, lower low, after breaking this low, you have got a bearish range. Your bearish range will start from here. This is your bearish range all the way down here. So this is your bearish range. Now from the top here, on the top where we have a swing point high here, this is the beginning of the range all the way to the downside. So that top or that swing high is what we call major liquidity. We call it major liquidity. We call it major liquidity. We call this major liquidity. Now from this major liquidity, we move all the way to downside. Once we start creating a pullback, this level will be called external liquidity. External liquidity. External liquidity. We call this external liquidity. We call this external liquidity. So try to understand that. So as market is creating a pullback, we don't expect the market to take out major liquidity. We always believe market will respect this major liquidity. Market will respect this major liquidity, right? So this is external liquidity. As market is creating this pullback, it will respect major liquidity, but external liquidity is always the target. External liquidity is always the target. Market will be moving down to target this external liquidity. Now once external liquidity is taken, we will get a new break of structure here and a new lower low will be formed. So from this lower high all the way to the lower low is a new range. A new range will start from this level all the way to the downside here. This is a new range. This is a new range, right? So within this new range we have 2 points. We have point A and point B here, lower high and lower low. So this lower high is what we call major liquidity. Major liquidity. This is gonna be a major liquidity. Sorry guys. This is gonna be a major liquidity. This is gonna be a major liquidity. And this low again will be a new external liquidity. That will be a future target after we get a pullback. After we get this pullback, market to respect this major liquidity. When I say market to respect, will respect this major liquidity, I simply mean market will not break this major liquidity. This major liquidity must be respected, and the market comes back to trade at a certain point of interest, somewhere here or somewhere here, and then start dropping down to take out this external liquidity. To take out this external liquidity. Now, once external liquidity is taken, that's when we say we have got a break of structure. We have got a break of structure. We have got a break of structure here. So this also will become what? Will become a major liquidity. A major liquidity. We are talking about a range. Once we go back to the chart, that's when you will understand what I mean. So major liquidity is targeting external liquidity, then a new lower low is formed. This way, we keep moving in this way. So this is for a downtrend. For a downtrend, lower highs, all lower highs we have are our major liquidity. For a downtrend, all lower lows we have are our external liquidity. Now let's talk about uptrend structure. It's the same. What we have to do is to understand that one is up, it is upside down, if I can say, or simply understand that it is upside down. So we have a low, we have a high, higher low, higher high. We have got a break of structure here. After getting a break of structure on this level, we will call this a major liquidity. This will be our major liquidity. This will be our major liquidity, and this high will become your external liquidity. This high will become your external liquidity. This is gonna be your external liquidity. This is gonna be your external liquidity. So the first external liquidity is here, but since we didn't have any structure, right now we have major liquidity, external liquidity, then we have a pullback. We expect this pullback will not break a major liquidity. Instead, we'll have a kind of reversal, kind of, for example, Wyckoff forming on this level before we go higher to take out a major, so to take out external liquidity. To take out external liquidity. Now, this level becomes our major liquidity, and it's going hard to take out external liquidity. Once external liquidity is taken, we say we have got a break of structure. We say we have got a break of structure. Once a major, so once external liquidity is taken, we have got a break of structure, and we are still in a bullish range, meaning the market is still bullish. So once you define your range, you know that is your playground. That is your playground. You don't expect a range to be taken until market proves that. Until market proves that. So this will become our future external liquidity that will be taken. This high will become our future external liquidity. Market will be targeting after creating a pullback. After creating a pullback, that will be external, that will be the target. As market is creating a pullback in this area, we expect the market to respect this liquidity level, major liquidity, and then we may have a break of structure, pullback, and then we go higher to take out this major liquidity. Take out this external liquidity. Right? So we expect market to go ahead and take out this external liquidity. So that's it. That's it for understanding a range and understanding major and external liquidity. Now, we are done talking about this. We are done talking about major liquidity We are done talking about major liquidity and external liquidity. Then what is internal structure and range structure? What is internal structure and range structure? Let's talk about all of these concepts at the same time, because I know once you understand this is the building block of our trading style. So it's a building block of understanding how price move, or it's a beginning of mastering how to read price. So we've been talking about range. We say when you have a lower low, lower high, lower low. Once you have this is your range, bearish range from the top or the downside. Now we have a break of structure here. Mark that level, a break of structure. Market has broken the structure low. Now you have lower low, lower high, lower low, right? So the structure is moving that way. Now you know this is your range. We are going to talk about internal structure and the range structure. This is your range. Now, as market is pushing down, you know, as market is pushing down here, market doesn't move like this. Remember, this is a line. This is a line you have drawn here. But market will be moving with some pullbacks happening. Some pullbacks taking place in this area. Market will be creating some pullbacks in this area. Try to understand that, because this is the fact of the market. This is how the market moves. Market will be creating some pullbacks in this area. Now, with that in mind, understand that from here, market will be creating a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. For example here, lower low, lower high, lower low, lower high. In this area, lower low, lower high, lower low, lower high. Market will be moving this way. Lower low, lower high, lower low, lower high, lower low, for example. So the chart is moving this way. Let's say our range ends here. Let's say our range ends here. Our range ends here, and all of these are pullbacks taking place in this area. These are the pullbacks taking place in this area. These are small structure, because market will not move with a single line. So market is creating small structure. Market is forming small structure as it is moving. So if we remove this straight lines we have, we remain with our structure like this, right? So this is our structure. This is our structure. So when you're marking structure, you look at major swing point: low, high, low, lower high, lower low. That is how we mark the structure. Now from this lower high all the way to this lower low, this is your range. This is your range. This is your range. Now with that in mind, so what do we call internal structure and range structure? So as market is pushing down, you clearly see that you have got a small break of structure here, and the market created a lower low, lower high, lower low, lower high, lower low, lower high. Okay, now look at this structure we have. This structure we have here is taking place before we have a break of structure. Pay attention here, guys. Pay attention here. Pay attention here, guys. Your eyes here. I need your eyes here. This structure, lower low, lower high, lower low, lower high, lower low, lower high, is taking place, or this structure, this movement is taking place before we break the main low, before we break external liquidity. Remember, this is external liquidity, this is a major liquidity, this is another external liquidity. Now, this low, before this low is broken, look at this structure you have. This structure we have before we break external liquidity, before we break external liquidity here, is what we call internal structure. Internal structure. The whole zone we have here is internal structure. The whole zone we have here is internal structure. The whole zone we have here is internal structure. This is internal structure. This is internal structure. Internal structure. This is what we call internal structure. Now, look at this low. Market broke the structure and created a low here. So as long as you have a low outside of POIs, outside of external liquidity, from that low, the first low, I repeat one more time, the first low you get here after breaking external liquidity, the first low, this lower low, and the following pullback all the way down, lower low, lower high, lower low, lower high, lower low, lower high, lower low. From this low all the way here, or the downside, this is what we call a range structure. This is what we call a range structure. This zone is called a range structure, and this is what makes both of these zones are part of what anatomy of a range. A range has so many stuff to talk about here. Some would not be shared here, but understand that this is what we call a range structure, and understand there are more to talk about in this area. So this is what we call a range structure. This is what we call range structure. This is what we call range structure. So if you know this is the range structure, this is the range structure. Sometimes we add something like this to show the beginning of a range structure. This is a range structure. This is internal structure. Internal structure. Now, this range structure, the reason market creates a range structure in this area, sometimes they even have a different movement compared to internal structure, or most of the time it will be formed after a strong void or a strong imbalance forming on this area, and then market start creating a range structure. This is why we usually look for Wyckoff accumulation to drive price back into the zone to create a deep or a shallow pullback. You have to understand that. So this is what we call a range structure. A range structure. And look at the rules. Make sure you count the low. From the low that broke the structure and the pullback, then you go down. That's the beginning of a range structure. Anything other than that is what? Anything other than that is your internal structure. Is your internal structure. Now that you understand this, let's talk about what we call a deep and a shallow pullback. A deep and a shallow pullback. A deep and a shallow pullback. Now we have got to understand anatomy of a range. We are done talking about major liquidity and external liquidity. We are done talking about internal structure. We are done talking about the range structure. Then what is a deep and a shallow pullbacks? As we have said, or as we have seen before, we have seen that this is gonna be a major liquidity. This is a major liquidity, and we don't expect the market to take out this major liquidity. Remember, as market is pushing higher, it doesn't mean market will sell from here. Market can sell from any zone here. So you have to be smart at identifying a point of interest, right? Point of interest where a market is gonna sell from. Now here as market is start pushing higher, it will probably break this range structure you have. It will break this range structure you have. A certain pullback will form in this area, and then market start doing what? Start pushing higher. It may trade in this zone, or it may trade in this area. For example, it may trade in this area and start going down, or it may go deep on this area, or it may trade on this candle sitting here and go down. So there is a way to know where it is going to touch and sell. So you have to know that. You have to know how price moves. Now, as market is pushing higher, on this level, market is creating a pullback in this level and then start pushing down. So as long as we are trading into this zone, this is when we say you have got what we call a deep pullback. A deep pullback. There are some rules regarding that, and maybe it can be shared for another video, but understand that this is what we call a deep pullback. As long as we have market going deep back into our range, this is what we call a deep pullback. This is what we call a deep pullback. So this is a deep pullback, right? So you understand that. But let's say for example, as market is pushing higher, for example, it may create kind of consolidation here. For example, it may create a consolidation here, and it comes back and it trade on this level, for example, here. Trade on this level, for example, or it can even raid a little bit here. That's something we cover when we talk about inducement levels, liquidity inducement. But it may trade on this level, but we still call this zone a shallow pullback. We call it a shallow pullback. We didn't have a deep pullback. It is a shallow pullback. We call this level a shallow pullback. Shallow pullback. A shallow pullback. This is what we call a shallow pullback. You have to understand that. So this is what makes all of those concepts together are what make up anatomy of a range. So they unite together to form what we call a range. This is a range, anatomy of a range, and then this is the behavior we expect. Deep pullback and shallow pullbacks. This is what we expect as market is trying to create a pullback in this zone. So market may do this, create a shallow pullback, and it goes down again to perform manipulation on this area. After forming a manipulation on this area, market may decide to do what? Market may decide to come back and trade in this area and then go down. So this time your range was here, but this time we'll start talking about structure in this way when you start marking the chart, right? You see how complex it is. You see how complex. This is why you identify this is a break of structure. You buy from here, market comes back to take you out, and then it still goes your way, right? You are buying from here. You are buying from here. Let's say you are buying from here. You are expecting price to do what? You are expecting price to go deep on the top. To go deep. You have put your stop loss here, and then maybe you are targeting those who trade support and resistance. Maybe you are targeting certain zone here, and then market does what? Market comes back to manipulate you. After manipulating you, market start going your way. Market start going your way, right? So you have to understand how market is moving, you have to understand all of this trick that they use. You have to understand the concept of inducement before you think of trading price. Also, understanding a range will help you very much when it comes to identifying what? Identifying the directional bias of the market. Directional bias of the market. Now, here, we were talking about a bearish market. For a bullish market, you simply need to have what? You simply need to have your range. You simply need to have your range. And you know exactly this is the low, this is the high, this is the lower low, this is the higher high. So this is the higher low, this is the higher high. Bit challenging. So we have low, high, higher low, higher high. So we have got a break of structure here. This is your break of structure. This is your break of structure. So you know exactly as market is pushing higher, it will be creating minor structure. It will be creating minor structure here as market is pushing higher. It will be creating minor structure. It will be creating minor structure on this level. You should know that. Minor structure. Minor structure on this level. Minor structure on this level. You may have a price moving like this. So price moving this way. So as price is pushing higher, we have to remove this middle line so that we see exactly how price is moving. As price is moving higher, it is going to break external liquidity. Your external liquidity is here. This is your external liquidity. 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 As market is creating external liquidity, we have higher high, higher low, higher high, higher low, higher high, higher low. Market is going to break external liquidity. Now, this structure we have before we get a break of structure here, this structure we have is what we call internal structure. Is what we call internal structure. This is internal structure. We call it internal structure. This is internal structure. This is what we call internal structure. Now, this structure we have, look at the rules I told you. As long as you break the external liquidity, the high that is formed, the high and the low that is follows, the high that is formed and the low that follows, and the higher high, higher low, higher high, higher low, higher high. This is what we call a range structure. When we start talking about Wyckoff structure and the concept of inducement and internal structure continuation or whatever, that's when you can understand the role or the importance of this level. So this is what we call a range structure. We call this level a range structure. This is range structure. We call this level range structure. So as market is creating a pullback, market may decide to come back on this area and start pushing higher. So if it stops here, we will call it a shallow pullback. But once you go deep to do something, I'm not going to talk about today, we will call it a deep pullback to create a new higher high. So how do you know it is going to create a shallow pullback? How do you know it is going to create a deep pullback? And how do you know where it is going to touch? How do you know the point of interest it is going to touch, right? So I'm not going to share that now, but what I'm trying to show you today is to understand how to read price by understanding your range and understanding the anatomy of the range, because this will play a big role in the future. So this will be a break of structure, and you have to repeat the same. There will be internal structure taking place here, and there will be range structure forming there out of the range, right? Before you get any other pullback. So we always expect that market will never break this external liquidity. The market will not break this major liquidity, but it will go to break external liquidity we have here. This is how to approach the market. So the purpose of today's video was to show you exactly the anatomy of the range. So we may use like a simple chart to show you. We'll use synthetic indices and forex chart to show you exactly what we mean by this. So without wasting our time, let's go to the chart, and I'm gonna show you exactly what you should be looking for in a chart, and that's when we start understanding why every movement is happening and how to approach any chart, whether you are trading crypto, whether you are trading synthetic indices, whether you like volatility indices or whatever, whether you are trading forex market or stock indices like Nasdaq and whatever. I promise you, you are going to see this. You are going to see what I'm trying to show you here, and you will start reading price in a professional way. So let's go to the chart and I show you how price moves. Okay, this is Euro GBP or Euro British Pound monthly time frame on IDC broker. Always use IDC broker if you need enough data. Now, whenever you're going to approach a chart like this, don't try to draw lines like this. Don't try to draw support and resistance like this. Now, what you have to do first of all is to understand your pair on a higher time frame, trying to understand the whole direction, the overall direction, and the range you are trading in. So whenever you open a chart like this, all you have to do is to zoom out and you go to higher time frame. Like if you have premium account on TradingView, you can even switch to 6-month time frame or 6 or 12-month time frame to see exactly how your pair is moving. For example, if you switch to 12-month time frame, you will easily see the structure your pair is really making. So you remember we've been drawing our structure, telling you that if market is pushing higher, it will be creating a series of higher high and the higher lows, higher highs and higher lows, right? So this is a bullish market. This is a bullish market, knowing that these are higher high, higher low, higher high, higher low, higher high, higher low, higher high. So it was creating all of these ranges, creating a POIs on this side, pushing higher, retracing back to the range. Then market pushes higher one more time to break the high on this level. Then market creating a pullback, then start pushing higher to break again the high. Basically, market is breaking all of these external liquidities, which means this market is purely bullish. The same here on Euro GBP. You can clearly see that market was creating a series of higher highs and higher lows. So you have to know your higher time frame range. You have to know the range you are trading in. So for example, as you can see, market was pushing high on this side, breaking the high on this level. The high was broken here. So whenever you want to see a break of structure, try to zoom into your candlestick, because as I told you, if market is bullish, is not supposed to. If market is bullish, will be breaking the structure high and the structure low. So every time you have a high being raided, we will call it either a break of structure or a liquidity inducement. We have two options only. If it is not a break of structure, it is liquidity inducement. Now, as you can see on this pair, we don't care about broker manipulation. That's something we'll talk about later in the future, but we know exactly here we have read this high, which means the POIs has taken place on this level. So remember the concept of range structure. The reason we zoom in is to see the beginning of range structure, because in the future, that's when we see the power of understanding range structure, the power of understanding the rule governing range structure. So knowing that this candlestick has taken out this high, so we know where we start from when we are counting our range structure. There is a reason why we keep stressing range structure and structure. It has a special message when you are trading. So we know exactly we have created a high. We have created a high from this low, and the market is pushing down one more time. Market is pushing higher one more time to create a higher high, to create a higher high. Now this time we know from this high all the way to this low, or if we start from the bottom, from this higher high, higher low, higher high, higher low, this is what we call internal structure. This is what we call internal structure. Always remember, this is your internal structure. This is your internal structure. This is your internal structure. Now from this higher high, higher low, higher high, higher low, higher high, this is a range structure. This is a range structure. A range structure. As you can see, market is creating higher high. Market is creating a high. Market is creating a structure low, structure higher high, structure higher low, structure higher high on this level, meaning we are bullish. And this time on higher time frame, we have broken the structure here. We have broken the structure here. This is the first POS on the left side. Let's start from here. This is the first POS on the left side. Now this is another POS here. This is another POS on this level. Now we know Euro GBP is on a higher time frame pullback. We are trading the pullback. This is the pullback. The horizon here is the pullback. And I told you this is your range now, from the low all the way to the high. This is your range. This is your long-term range. So if we remove this and this, of course you know that that is the structure. We have to keep it our chart sexy. So we need to see exactly what our pair is doing. Now we know that on a higher time frame, this pair is totally in a pullback. We are in a bearish move on a higher time frame. So don't care this push to the upside. What we know that is that we are bullish. Overall, we are bullish, but this time we are trading a pullback. We are trading a pullback, and our bullish range start from this low all the way to this high. This is our bullish range. This is our bullish range. Now, if we zoom in to like monthly time frame, if we zoom into monthly time frame, we're gonna see more details. But by this time, we know exactly where we are on this higher time frame. On this higher time frame. Now on monthly, for example, if you start from here, you can see how market was breaking structure on this level. Try to see all of this information you have. A break of structure has taken place on this level. Then from this high that broke the structure. Remember the rules, remember all of those rules governing a range structure. From this high that broke this structure high, and this low, this is the beginning of your range structure. And when we are studying Wyckoff, when we start talking about Wyckoff structure, this will help you a lot, if I can say. So you see, market is creating a deep pullback. This is what we call a deep pullback into our range, a deep pullback into our range, trading on our internal structure continuation to create a new higher high, So that's something you need to understand. That's something you need to master. Now, as market is trading on this level, we know we are trading the pullback on Euro GBP. You are trading the pullback on Euro GBP. We want to see market dropping into this range, Don't see this push to the upside and you start thinking it's time to go higher. Until market takes out this high, we are still in a pullback. So all we have to do is to understand that we are still in our range, in our bullish range. We are still in our bullish range. We need to study when we'll be talking about liquidity in this level. That's when things will make sense in the future. But this time, what I want you to understand is the power of range and the anatomy of a range, so that whenever we create any new video, you'll be able to understand exactly what a pair is doing. Or once you join, for example, a mentorship, you will easily understand what you are going to study or what you are going to look for in this area. So you will come with these skills before you even try to join us. Now here, as price pushing higher, take out this high, we know exactly this is our minor break of structure we have on this level. Now we have a price creating a series of higher high, higher low, higher high, higher, which is internal structure. Now as long as we break here, anything we have here is gonna be a range structure. Sometimes a range structure doesn't form like this always. Sometimes it may be a sharp move, especially when you have a high momentum with a strong rejection. So you will see a clear range structure here if you zoom in to lower time frame. Now in this area, if you look at this level, here, you can clearly see that market was creating a higher high, higher low, higher high. Then as market is creating a pullback, it is creating a pullback with retro structure. Remember, everything we have here is a pullback. Let me show you what I mean. Everything we have here in this structure is still a pullback. Why? Because we have a high on this level, we have a low, we have a high. So market is creating a pullback. In this zone. So meaning this time, even if we have a kind of downtrend forming on this area, this is still a pullback into this zone. Remember the concept of a range. Let me show what I mean here. If we take this level as a smaller range, in this area, you will easily see that you have got a kind of break of structure on this area. This high was broken on this area, making this level a low and this level a high. Now whatever we have here is a pullback. We expect another push to the upside until we have broken the low. That's when we say a possible pullback is coming. So what I mean here is this: whenever we are pushing higher, creating retracement, pushing higher, and we break the structure low, once we break the structure low, we expect a pullback. then we go down. So how? Because we have broken the structure low here. As long as we break the structure low, immediately we will have a bearish range. A bearish range from the top all the way to downside. From the top here all the way to downside. All we need is a pullback on our major liquidity to create a lower low in our major range. To create a lower low in our major range here. I hope you are getting the idea of what I'm trying to show you here. Now try to see how this pullback was coming in. Every zone will create its own ranges. Now the pullback, because the pullback is forming a downtrend, this pullback will be creating a bearish ranges. Will be creating a bearish ranges. So this is why you see we have a break of structure. Once we have a break of structure, we have a lower low. So a bearish range will start from a lower high all the way to the lower low. Everything we have here is gonna be a pullback, and this level is gonna be our major liquidity, and then this level is gonna be our external liquidity market is looking for. We are coming to trade on this area. Our limitation is right here because this is the current range, the smaller range we have at the moment. Now as market is creating a pullback in this level, we have a new range from the top all the way to the bottom, and the market is creating a pullback into our zone using internal structure to continue a downtrend. I mean here. And then market is going down to break external liquidity one more time. So we keep believing in that movement until market prove us otherwise. So as the price is pushing higher, on this level, as the price is pushing on this level, it is seeking something in this range. We know that this is gonna be our range. This is gonna be our range. We expect another push to the downside until market breaks this high. We keep believing we are still going down into this range because we didn't finish testing every level. That is how we keep believing in the bias of the market, knowing that we are creating lower low, lower high, lower low, lower high. We need another lower low, maybe somewhere here, if it is not going to break this low. Right now that you have understood what I'm trying to show you here, as you can see, market ended up doing what? Market ended up breaking this structure low. So this is the minor break of structure we have, which is a signal that market is gonna create a lower low here, a lower low here. So this is a little pullback in this range. In this range, maybe somewhere here. Then we need to see a drop. We need to see a strong downtrend forming on this area. So whatever market is doing here, even if you have broken this minor structure on this level, I mean here, you can keep calling this as your current bullish range, thinking that price will go higher. But overall, we want to see price trading down on this level. So this is how we keep identifying that's why we keep identifying structure. Now as market is trading on this area, creating a beautiful a kind of beautiful distribution here, we only want to see a confirmation here when we'll be breaking this low. When we break this low, that's when we have what? That's when we have a kind of confirmation that we are going down. So once we break this low, our range, our bearish range, will remain this one. Our bearish range will remain this one from this low all the way to the high. I mean, when we have broken this level, this will be our range. Sorry, this will be we'll have a kind of break or structure on this level. Then our range will be moving this way. We will have a kind of range forming this way, and then we will have price going to test any zone here, maybe somewhere here, or internal structure continuation this level to create a new lower low. I mean, when we will be moving this way, where market will be creating a structure like this, creating lower high, lower low, lower high, lower, until we go down into our area of interest, because our point of interest is still below here. We need to see market trading there. So if it is choosing to use internal structure continuation this level, it will break this high. By this time, keep believing that we want to go down, and this is the power of understanding ranges, because market will always come back to the bottom of the range to seek something. Understand that you are bullish on a higher time frame, but you have a long-term pullback forming on this level. So we still believe this is likely to be a successful distribution, because you have a buy climax, automatic rally, secondary test, up first, U-turn, test of the U-turn. So we need to see market probably dropping. We need to see a clean break or structure somewhere here, and then we wait for a pullback here to join a long-term downtrend on our zone. So we are limited in this area because we have got what? Because we have got a retro break or structure here, meaning we are still in a bullish range here. We are still in a bullish range here. We need to see market doing what? We need to see market creating a new higher high, because we have a bullish range. We have broken the high, we have a bullish range. We need to see market creating a new higher high, but because we have a overall bias, so we expect also market may do what? Market may create a lower low on this level, and then you have a pullback, then you continue all the way down. So once we break this low, we'll have a bearish range from here all the way here, or we will wait for a pullback to a certain zone, then we go down. So that is how we move with structure. That is how we trade the market using a simple structure point. What I'm teaching you guys is to understand the power, to understand the range structure, internal structure. Then more stuff will be coming later in the future, but this time I want you to understand how to see the direction of the market. If we go deep here, you can even see a trade we have in the future, like a tomorrow trade. You may see a clear trade that you're gonna take this week, right? It's simple. All you need to do is to understand that the market was creating a lower low, lower high, lower low. So you have got a break or structure. This is a pullback into the range. Then you have got another break or structure here. So everything you see here is a pullback. Expect another lower low to form. So your current range, if we zoom in like to daily time frame, you will clearly see, immediately you will see your range. Immediately you will see your current range the market is trading in. Your current range, market created a lower low, market create, we have a lower high, lower low, right? So basically we have this lower high, lower low. Market is coming back to use internal structure to continue a downtrend, then to create a new lower low. So your scope is right here. You focus on this level, because you're gonna have this pullback giving you opportunity to go down. So this is how to deal with the market using ranges only, and you know exactly what the market is doing, and the intention of the market. Knowing that you are limited on this area until market breaks it. Until market breaks this low, you are limited to this area, because you have got a kind of bullish range in this area. But knowing that this can be a successful distribution, which may result in a strong downtrend in the future, because our higher time frame range is dictating that we have a bullish range, and we need to create a kind of deep pullback into our point of interest down there on the left side. You remember. Now this is a simple example on a Euro GBP, maybe for those who like trading synthetic indices. We may choose step index. So step index on a daily time frame, you can easily see that it was creating a kind of strong downtrend, a long-term downtrend that was taking place here. But as you can see, we have major structure forming here. We have a major structure forming on this level. Not easy to draw something on this broker, but you can easily see that you have kind of a major structure forming on this level. So as you see that, if you take this level, for example, if you take this level as your recent break of structure here, as your recent break of structure on this level, as your recent break of structure on this level. If you want, you can even choose this level, because this is a kind of pullback we have, at the moment. Let's say you open your chart, for example, you see it is starting like this. Let's say this is your chart, for example, or you can even start from here. But what you should know is that we have lower high, lower low, lower high. Market is creating a lower low. Understand that. Understand the structure we have on a step index. The structure we have on a step index is moving like this. Now, as market is breaking this structure low, from this low, or from here, this minor break or structure you have here, this will create a lower low, lower high, lower low, lower high, internal structure continuation, lower low, lower high, lower low, lower high. Then we have a minor low here, but all you have to know is that this is internal structure. This is your internal structure. So from that level, this is internal structure. This is your internal structure you have on that level. I mean right here. This is internal structure. Here. This is internal structure you have on the step index. And then from the low that broke the structure. From the low that broke the structure here. From the low that broke the structure all the way to the high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is a range structure. This is a kind of range structure forming on this level. This is a kind of range structure forming on this level. So what does it tell you? The range structure has rules that it follows. If we start adding Wyckoff structure on this level, you will easily understand why we need to create a deep pullback into our zone, or a kind of shallow pullback. But we need a deep pullback, and this high should be the target. We need to come back to this zone. So this is what the step index is gonna do. But as a trader, you do not have to wait for such a long time for everything to happen, because every structure you have here market will be creating another structure here. If you look at this level, so you forgive me because marking the chart here on this binary or derivative is not easy. You draw something and they disappear. It's not easy to draw something on this chart. You draw something and it disappear. So you clearly see that you have a break or structure somewhere on this level. So this low that broke the structure, this high, is a range structure. So you need a deep pullback into your former zone to look for a certain area that we talk about and to trade into your point of interest, sitting somewhere in this level. Then before we go down, remember, a point of interest doesn't have to be this level, doesn't have to be this level. Your point of interest can be in this zone. I mean, to trade here, you may end up finding your point of interest is here. So that's how you should approach the market. Now, breaking the structure, a pullback into the former zone, knowing that this range you have here is your range structure of after this POIs. I hope you are getting the idea of what I'm trying to show you here, because the reason I'm not drawing lines, it is somehow difficult on this chart. So a break or structure, then everything you have below here is what is a range structure. Everything you have below is a range structure. This is a range structure. This is a range structure. This is a range structure. Then we need to create a pullback into the zone to seek something we may talk about in the future. Then we have a break or structure on this level from the low that broke the structure or the pullback. This is a range structure. You have to know this range structure because it has a message. If we zoom into our time frame, we are on a daily. If we zoom into M15, you will see wonders. You will see wonders. You will see wonders. You see why you may catch this pullback and you may sell this push to downside, right? Creating a pullback into a certain zone. Now here, a break or structure. A break or structure on this level. Here, everything you have below lower low, lower high, lower low is what is a range structure. Is a range structure. That is a range structure here. Until you have a deep pullback into our zone. This is a range structure until you get a pullback into our zone and we start selling all the way down. So we keep repeating the same process on each structure. On each structure. Market doing what? Market breaking the structure on this level, creating a range from lower low, lower high, all the way down, a range structure. Then a deep pullback is coming and straight back into our range. Then we start selling all the way down, maybe selling from this a kind of reclaimed block into your reclaimed block sitting on this level, and then we start pushing all the way down. So there are different types of point of interest. That's something we're not going to cover today, but understand how to read structure. So you know range structure is starting. This is the beginning of range structure, then break of structure on this level. You are getting a break of structure on this level. After break of structure on this level, where is your range? Your current range starts from the lower high to the way to all the way to the lower low. So this is your range. This is your range from the lower high all the way to the lower low. This is your range. So a pullback into our zone to take something in this area, then we push all the way down. A beautiful redistribution forming on this level to create a new push to the downside. Same here, push. Then we have got kind of internal structure. We are not yet confirming an uptrend, but what we know is that the step index is looking for ways to do it, for ways to go back to, because it's almost complete. It's almost, range structure is almost complete. We know how to measure that, how to know if a range structure is complete or not. We know how to deal with that. So after trading higher, you will see that, it will surely come back here, and then that's when we'll be seeking, we will be validating a trade, whether it is going to stay on this standard structure or whether it is going back to take out that high. I mean this one. So you should know which high the market is gonna look for. So so that's it for step index. Same on a crash. On a crash 500. I know there are some people who love crash 500, but this is how it is moving. So you have got a high. First of all, you have a low and a high. Market is dropping down, taking out the low. After market takes out the low here, after market takes out the low on this level, after having market taking out the low right here, the low was taken somewhere on this level. This the low was taken somewhere on this level, so you know exactly. So market has taken the low on this level, created a return pullback, and then create a new lower low on this level. Everything we have here from this low all the way here and here is what we call a range structure. Remember the rules that govern range structure. So after identifying your range structure, all you need to do is to wait for kind of deep pullback into your zone. So making this the main lower low. So we have a structure like this. So we have lower low, lower high, lower low. After market creates a lower low on this level, it goes higher to create a deep pullback. Remember, after we break the structure and we have a range structure, our expectation is a deep pullback, and we know how to measure whether a deep pullback is coming or not. So when I say we know, I mean I know how to do that. I haven't yet taught you how to do it. So we have got a breakthrough structure on this level. Now as market is breaking structure from this low, here, that broke the structure, is the beginning of range structure all the way to this high, lower low, lower high, lower low, lower high, lower low. Everything here is a range structure, a beautiful Wyckoff accumulation forming to create a push to the upside. The whole move here is Wyckoff accumulation taking place to create a push to the upside. Now on this level, market as your what? Market as your range structure. Market as your range structure. After marking this level as your range structure, then try to understand that this level, your main lower low is here. This is your main lower low. This is how to deal with order flow. This is your main lower low. Then a deep pullback into our range, because after breaking this level, this is our breakout structure. Then our range start from the high right here. Our range start from the high. This is our major liquidity, and this will be our future external liquidity that will be taken when the market is starting pushing down. So this is a deep pullback forming into our range to create a new downtrend. So as long as we break this level, then our new range. We know our new range. Now we have a traded on this area as our point of interest. Then our new range start from here, and this is gonna be a break of structure here. We have got a break of structure, and market creates start creating what? Start creating a range structure. Market is creating a range structure. Market is creating a range structure. So what is your expectation on crash? Let me show you how it will move. Crash index will be moving like this. Expect that as we have a range structure forming on this level, as we have a range structure forming on this level, expect that crash 500 will be moving like this. Expect this move before we have a deep pullback. So with this in mind, we know that we will have a kind of range structure forming on this area until the market prints any other thing, but this is our true expectation. Then as a trader, we are not concerned about coming back here because this may take a longer time. So what we are concerned about is our current range structure market is making. Now with that in mind, we'll be taking opportunities that the market will be creating on this level. So because every zone will be creating its own structure, range structure also will be creating its own ranges. So this is why you see we have a lower low, lower high. Market is creating a lower low after breaking this level. After breaking this level here, after breaking this level from this low, let's zoom in here. After breaking structure on this level from this low that broke the structure, from this low that broke the structure all the way to this high, this is the beginning of a range structure of this POIs. Remember, this is a bigger range structure. These lines we are drawing, this is a bigger schematic, but this time we want to focus on this smaller structure that will be making a range structure. So meaning after this POIs, this is a range structure. From this lower low, lower high, lower low, lower high, this is a range structure. Everything here is internal structure except this one. So this is a range structure of this move from here. So we want to see a deep pullback forming. So this is why you see we have a successful Wyckoff accumulation taking place on this level, and it is complete, as I've been sharing in our session with the student. I was telling them that this is something that's going to fly to the moon, into this zone. So this is why you see a schematic is complete, and we are having a breakout structure on this level. So range structure is being broken. It's time to see a little pullback, and then we go higher, taking this high, trading into this level, and then we think of a deep pullback or a kind of shallow pullback that's going to be formed on this level, and then we sail all the way down again. This is how it will be moving. So whenever we break this structure again on this level, once we push higher and then we create a push to downside, once we break this low, there will be another form of range structure forming here. Another range structure forming here that will be giving a successful accumulation to drive price back into this zone again. We'll keep repeating the process, working with the current ranges we have. This is the ranges. Our current range. Our current range is right here. Our current range is right here. So we need to see price pushing back to this zone before we create a new lower. So this is the purpose of this move. This is the purpose of this move. So this is why we have this circle automatic secondary test in phase B spring, then breakout structure, maybe a little pullback on this level, then we push higher to take out this high, and even this one. We may even trade back on this area, something we'll talk about in the future if necessary. And then we start pushing all the way down. So this is how to read the structure. This is how to read the structure. So if you are interested in trading crash, start thinking in this way. Until market proves you otherwise, you have to expect this type of movement the same way it did it here, the same way it did here. So it will likely create the same, because it confirms with all of the rules that will create this type of range structure. So the same here. There were some students who were killing the market. If you have seen some screenshots in our Telegram, who are killing the market on this level, trading this zone, because they know exactly what is happening. They know even if this is a small range structure, this small range structure also will be creating its own structure, meaning we have a lower low, lower high, lower low, a breakout structure, small range structure on what time frame, lower low, lower high, lower low, a breakout structure here. Once we break the structure, we're going to have a small range structure here to create this pullback. Then we sell this pullback. After hitting our point of interest, we are going down. We know the schematic is not complete. Wyckoff schematic is not complete. There was one missing move, so it was worth taking. So selling all the way down. Now another opportunity to buy coming in, a breakout structure as a confirmation. It's time to come back into this zone to seek something that I'm not going to share right now in this video. So this is how to approach the market, knowing that every zone here will be creating its own structure. It's all about nesting price action. You know what I mean. Now this is it for crash, and I know that some people who love gold. Let me talk about gold as the last point. Then we reach the conclusion of this video. Then we'll come back again, sharing more stuff as we go on. Then we are talking about gold now. So gold, as you can see on higher time frame, like monthly time frame, we are creating a kind of higher high. On gold, creating a kind of higher high on gold. So we have taken the high. So this is our range. This is our current range. Then we are still trading. We have created a higher high. We don't know when we are going to start creating a deep pullback. Because it may move like this and then start pushing down one more time before we go higher. So all you have to do is to understand where you are on this level and then focus on the structure you have as market is pushing higher. The current structure you have as market is pushing higher. The current structure you have. Focus on that to understand the purpose of gold as it is creating this type of pullback. So what does it mean here? Now switch to weekly time frame to see the structure. If you start here, for example, you may clearly see that the market was creating higher high, higher low, higher high, higher low. As market is approaching to break a structure, we have broken the structure on this level. So forget that you have all of this information here. And look at this level. So we have broken the structure. The structure high was broken on this level, and after structure high being broken, we didn't see any deep pullback in this zone like this one. We didn't see any deep pullback. Market created a shallow pullback to immediately break the structure high. This has a strong message. This area is an area of
high value to look at as market is creating a pullback, because every time break a structure, a range, within a range we need to see a pullback. If we don't see a pullback, market will always come back there. For example, we have broken the structure on this level. We have broken a structure on this level. We have broken a structure on this level. After breaking this structure, market did not create a pullback. Instead, it created a range structure here. This is a range structure. After creating a range structure, market immediately start creating a deep pullback into our zone. A deep pullback into our zone. The same here, you have broken the structure here. We have broken the structure here. Market did not come back into the zone. Instead, it create a range structure here. A range structure here. So you have to know this. You have to know this. Let me zoom like 2 daily time frame so that you can clearly see what we mean here. Market has broken the structure. Market has broken the structure on this level. But we didn't see a deep pullback. Instead, we had what? We had a shallow pullback in this area. So meaning we have something market need to grab in this area. Something we are not talking about this today, because we are not talking about inducement. We are not talking about liquidity. We are simply talking about the structure we have in this area. So as market is pushing higher, you can clearly see that it created a minor breakout structure of this range structure, because we have a higher high, higher low, higher high, lower low, a kind of breakout structure on this level. It created a breakout structure on this level and start trading all the way down, breaking the structure, as you can see. So here we are coming out of POIs. Now market is doing what? Market is creating a pullback, breaking the structure low, on this level. So market is breaking the structure low, creating what? Creating a lower low, lower high, lower low. Now as it is creating a pullback, the range was this one. Gold was trading in this range. Gold was trading in this range. I mean here. As we start creating a pullback, our range, as we start pushing higher, I hope you understand the concept of range. We've been talking about that for so long. As we are pushing higher on this level, this is our range. This is our range. From the lower high all the way to the lower low is our range. So market may decide to trade on this level, on this level as standard structure continuation. Something we are not covering today. But what you have to understand is that this is a pullback. Market is creating a pullback into the zone. Market is creating a pullback into the zone. As it is pushing higher, it has chosen to do what? It has chosen to trade on this level. It has chosen to trade on this candle. After trading on this candle, it pushed all the way down and broke the structure. After breaking the structure, we say you have got a breakout structure on this level again. We are now in bearish ranges. You have broken the structure on this level. Structure low was broken on this level. So we have broken the structure on this level. Then we have a lower low, lower high, lower low. So as market is pushing down, it is seeking, of course, some liquidities. We are not talking about liquidities, but at least we are talking about the structure market is using to create a downtrend. Now after this breakout structure you have here, After this breakaway structure, you have a breakaway structure here. Now you have got lower high, lower low. So where is our major liquidity now? Our major liquidity is this high. Our major liquidity will be this high. Our major liquidity will be that high. Our major liquidity will be that high. Wait. Our major liquidity will be that high. After this high, our external liquidity will be this low. Look at how we trade price action. So this is our current range. This is our current range. So we don't want to see market taking out this level. Whatever it is doing, it will never cross this high. As long as we want to continue to be bearish, as long as gold is willing to continue to be bearish, it will not trade above this level. It will not trade above this level. That is the fact of the market. That is the fact of the market. As you can see, it went higher and it traded on our major liquidity. Our major liquidity, grabbing primary liquidity on this level, inducing primary liquidity, and then trading on our major liquidity, and then went down and broke the structure. This is a breakaway structure. Now, a breakaway structure. After this breakaway structure, we see have got a breakaway structure on this level. Breakaway structure on this level. After this breakaway structure, you have a new range. What is our new range? Our new range is this lower high we have here. This is our new range. Our new range is this lower high. This is our new range, this lower high, and then all the way to this lower low. Market is forming on this level. Market is forming this on this level. Note that as a trader, as market is pushing down, it will be creating smaller ranges. So you have to be a range trader. You have to be a range trader, knowing that this is your lower low. You need to study a pullback and the level it is looking for to create a new lower low. As you can see, market is creating structure inside. Knowing that a new lower low is formed, so your range start from the lower high all the way to the lower low. All you need is to understand the area market is looking for, and this is something we are not going to cover today, but very crucial maybe in the future in case we decide to release a new video about that. So we are creating a lower low, then it's time to think of a pullback. So if we continue to be bearish, if we want to be bearish, they say gold would never break this high. Gold would never break our major liquidity. Gold will never break this major liquidity. It will stop somewhere here or somewhere in this area, but it will never ever break the structure high. Remember this pullback. So as you can see, it traded on this point of interest. We call this point of interest a propulsion block. This is a type of point of interest. Then it start pushing down. Let's see the move. Now as it is pushing higher, gold now is trading on this area. Try to see what was happening. The objective, remember, as market is pushing down, the objective is to take out external liquidity here. The objective is to take out this external liquidity. The objective is not complete. So why is it pushing higher? What is it looking for? First of all, we still have a point of interest. We have inefficiency here. I'm not going to talk about everything today. We have inefficiency or imbalance sitting here. We have imbalance sitting here. Then we have a kind of this high can serve as a weak high to trap people, to make them believe it is a break or structure. They start believing we are going higher if we break this high. Some people think we are going higher, but the signal of going higher will happen once we take out this high, because we are still in our range. Look at the power of a range. We are still bearish. Even when gold breaks this high, this one, even when gold breaks this high, we are still bearish. It may break this high and trade on our major liquidity, right on our point of interest, and then still start selling all the way down. Or it may decide to use this structure, to continue a downtrend, lower low, lower high, lower low, range structure, breakout structure. There is no pullback, range structure of this POIs, and then it comes back and trade on our point of interest somewhere here, and then it goes down to do what? To trade in this area, to take out this low and trade in this maybe internal structure continuation or a point of interest somewhere here. So this is how to deal with structure. This is how to deal with structure. So as market is pushing higher, there was more ranges forming, a pullback, ranges, a pullback. So this is how price is exactly moving. So if you see this breakout structure and you see a pullback, understand that is forming a Wyckoff structure here to create a down trend on this level based on Wyckoff redistribution. This can be a beautiful Wyckoff redistribution, but we need to confirm a move here. Then we go deep to grab those liquidities. So after trading on this level, gold may decide now to go higher, because this is the last internal structure that was not fully mitigated. So we need to see whether it is going to choose this level to continue an uptrend, or whether it is going to come back to this area. So to go higher, the confirmation that it has chosen this level, it is when it will be breaking this major liquidity we have here. This is the only area that will confirm that we are likely to have a bullish trend at the moment, because this time we are in a pullback. So this is it. This is it for gold. Now, as a retro understanding, or retro understanding of what we learned, or retro recap, or retro summary. So make sure you understand your downtrend, how it is forming, and understand what is happening outside of your breakout structure, because this is the only signal that gives you that we are going to have a pullback. Then as we are having a pullback, try to understand what the pullback is looking for here, a point of interest somewhere here, more point of interest here. There are different types of point of interest. It's not necessary the type of other block you're going to mark and you say this is another block. No, that's not how price moves. It may decide to trade on this area, and you are waiting for price to come back to this area while a successful distribution is over on this area, touching a certain point of interest like reclaimed block, for example, and start pushing down. So understand that, understand everything you have, whether you are bearish or bullish, and never trade a pair without looking at the highest time frame possible, whether you are scalping, whether you are day trading, whether you are doing whatever, swing trading. Make sure you understand the whole picture of your pair you are trading, because this is an investment. You are investing your money. Make sure you understand the whole picture of your trading. There are more talk about the anatomy of a range. There are more talk about everything we covered in this video. This is the longest video I have ever done. So make sure you watch it and rewatch it, and I will be creating more stuffs to help you guys, and then we will continue to be together. Make sure you subscribe to this YouTube channel. Make sure you hit the like button if you love these things I have taught you in this video. Make sure you like this video. Make sure you share it to your friends. Support this channel. Show me your love. Then I'm gonna be here for you guys. This is JD forever. FX Beethoven forever. FX Beethoven kumugongo. Turi kumwe forever. So if you need to contact us, look some links in the video description. If you want to join our Telegram channel, look some description in our video. If you want to talk to me on WhatsApp, there is a link down there. Also, you can see some social pages in our screen. In this video, you can use whatever to reach us in case you need a special care. I mean, in case you need a special care about understanding structure. So thank you very much. JD forever, FX Beethoven forever. Me signing out.